You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody, welcome back to the Futures Rundown, the program here on Wednesday, where we dive into all the madness going on in the world of futures. And spoiler alert, there's a little bit of madness to talk about, which seems like that is always the case each week. Remember, if you have questions about all this madness, you want to join us on our pro Q&A sessions, or maybe you want to talk some unusual activity at the end of the week. Maybe you want to get some exclusives, you want to win some pro prizes, or you want to join our live stream. Theoptionsinsider.com/pro is the place to go to do all that. As we see who's joining us on the old Futures Rundown today, I'm pleased to be joined once again by our good buddy, Mr. Dan the Man Gramza from Gramza Capital Management. Dan, welcome back to the Futures Rundown, sir.
Well, thank you very much, Mark. Great to be with you. Looking forward to exploring these futures markets today. There's always something to look at, as you mentioned.
How are things in Gramza land, sir?
Things are very good, thank you. All is good. We're blessed. Things are working right along. Everybody's healthy and life's good.
All right,
Hope
sir.
all
and
is well with you.
All is well with the show as we keep on rolling. It's time, listeners, to enter the trading pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, everybody, welcome to the Trading Pit, the portion of the show where we break down what the heck is lighting up the futures markets this week. And Dan, a lot going on this week, a lot going on today. If you and I had recorded this show about an hour and a half ago, might have had a very different program. But what's been catching your eye so far this week in the world of futures, sir?
Well, it's been very interesting. We've got fundamentals drivers that are interesting. We've got political, geopolitical events happening around the globe. We have tariffs. We have the Fed. We have a lot that's stimulating the market. And from my point of view, when I look at an overview, the stock markets I think are interesting. The indices, stock indices, I'm looking for upward movement in those markets. Possibly, I thought the dollar would start to get stronger, and that's debatable in terms of how it's behaving with respect to the currencies. When we look at Bitcoin, it's firming up a bit. Is it ready for a rally? That's a possibility here. 10-year notes, if you look at the price action, those are firming up a bit, which means yields may be coming off. We'll have to watch that. Metals, I think gold and silver want to go higher, but do they have the excuse to do that? Crude oil also is in that sideways mode, which I think makes sense. Nat gas getting firmer, and the grains, the ags are really firming up today. So let's see if they can also follow through.
We saw some drama today. Dan, what do you make of all this will they, won't they with Powell and Trump? Apparently, there was a letter that he held up today that said he was going to fire him, but it never went through. Then he came out. Markets took, as you would expect, a bit of a dive. Then, of course, this came out that it's not happening, so the markets have rallied. What do you think about this will they, won't they dance here, Mr. Dan?
Well, I guess what goes through my mind, Mark, first, how much longer does Powell have for his term?
that is a good question.
Right. It's like 6 months or maybe less. I can't remember now when his term is over. So that's one issue. If you look at the focus, what is Trump doing? Trump is saying, well, doggone, I lower those interest rates. Do you know how much it costs when it comes to financing our debt? This is important. Lower interest rates. That's his focus, the cost of our debt. Now, let's talk about Powell. Well, the Fed, they look at keeping unemployment low. They look at keeping interest rates stable, inflation low. They keep at price maintaining stability. That's their focus. It's different than what Trump is talking about right now. Now, let's talk about the environment that the Fed's working in. Is labor in terrible shape? No, not really. Is inflation going nutso? No, not really. Well, shouldn't they lower interest rates? And the Fed script, which makes sense to me, is saying, we don't know what tariffs are going to do. That we don't know what it's going to do to inflation. Nobody does. And we have a lot of tariff stuff out there. So it creates that uncertainty. You know, Mark, what the Fed doesn't want to do, they don't want to do what happened to them in the 70s. The Fed started lowering interest rates and inflation went up and they had to increase it. They don't want to be in that boat. So are they being conservative? Yes. And what have they said, Mark? They said, well, you know, maybe before the end of the year, we could lower interest rates a bit. So they're open to the idea. Do they have the economics to support that? I don't think they do. I think they're doing the right thing. And I think Trump's focus is on something different.
Yeah, go figure. A guy who spent his life borrowing money for property would be sensitive to interest rates, right? He's like,
yeah, there you go, Mark. There you go.
Different perspectives.
Good.
Different perspectives from different people out there. But you're right. Powell and company, very infamously, very early into his tenure, right before the pandemic, said, you know, inflation doesn't really matter. We're going to let it go off the hook a little bit, let things get a little looser. Then, of course, we all know what happened. I think he regrets those statements now. But yeah, so not surprising. He might be a little bit more aggressive on inflation than he was in the past as well. So kind of both those things coming to a head right now. Kind of interesting stuff out there. Let's see what's interesting in the futures markets as a result today, listeners, shall we? Well, let's kick it off to the upside. Let's keep the positivity going, listeners. And number 5 to the upside this week, it's coffees. And maybe that's not good news, up 8.45%. If you've been feeling the pain whenever you head to Starbucks, listeners, then maybe that's unwelcome news. I apologize. Don't shoot the messenger. Just blame Dan. Dan's the one who told me to talk about coffee today on the show. Coffee, number 5, up 8.45%. Number 4, nat gas, our old pal nat gas, up nearly 10%, 9.94%. So getting a little spicy. Kind of weird to say that in the middle of summer. We're seeing nat gas get a little spicy, but then again, these are unprecedented times in many respects. Palladium number 3, the P metals have been having a good run. Palladium number 3 up 13.01%. Then we've got kind of a combo coming in at number 2. Crypto bulls will know what it is. It's Ether, the big and the micro futures, up about 18.5%. Man, that sounds good to say if you've been just suffering with ETH for the last year and a half. This last month and change is finally getting some green back on the screen, which, again, if you've been watching the crypto space for a long time, or God forbid, hodling some ETH for the last couple of years, you've been feeling that pain. You know, ETH was our number 1 worst performing asset for much of the year on the show. So getting nearly 20% of that back this week. And then the big dog this week, OJ, up nearly 25%, 24.87%. So OJ's been getting beat up all year as well and making a resurgence. Maybe that's our theme for the week, Dan. It's assets that everybody hates making a sudden resurgence this week, sir. What do you think?
Well, you may be onto something there. If we think about these markets, the palladium, the platinum on the metal side, we have seen a little kick. But if you look at it from just a technical point of view, what we've seen in these markets is a spurt. And what I mean by that is we have had a kick in volatility, but is it sustainable? And I think that's something we want to think about. If we were participating on the long side in the markets that you just mentioned, it's interesting, but the ride that we can expect over the next few weeks, or actually next few trading sessions, are very important. So if buyers are here, and that's what this implies, which is what you've shown us, the issue is, can they follow through? And that's yet to be determined. If you look at the behavior that we've seen in these markets, you have to be very cautious on the long side.
Now let's go to the dark side now. What's moving down this week, listeners? By the way, looks like our chat is excited about ETH. They're looking forward to their ETH Ferraris. I guess we have Shiba Lambos and we have ETH Ferraris, Mr. D. I think we're a little bit of a ways from an ETH Ferrari. Our chat even says, right now we have an ETH Hyundai. Yeah, I could see that. But hopefully someday, Dan, we can upgrade that to an ETH Ferrari. At the very least, maybe a Beamer, Mercedes, something, something a little better than what we got right now out there in ETH. To the downside we go, listeners. It's been another rough week for rough rice, off about 3.5% this week. Keeping it on the food theme, number 4, it's pork cutout, listeners, off 4% this week. Again, food themed. In fact, all of our bottom 5, Dan, is edible in some way, shape, or form. Number 3, we've got our old pal spring wheat, off nearly 5%, 4.95%. Number 2 to the downside this week, kind of following on the heels of pork cutout, it's lean hogs, listeners, off 5.39%. And if that's not enough for your lunch table out there this week, maybe you want to saddle up by a warm fire, maybe not this time of year, but maybe in December, with a nice cup of cocoa. It's getting cheaper, off 8.8% this week. So Dan, apparently if it's edible in the markets this week, it took a hit. What do you think?
Well, it sure seems that way. That's a very good observation. I wasn't thinking about it that way, but yeah, you're right. They're edibles. And it goes back to supply and seasonality in some of these markets. Some of the issue we had, you mentioned cocoa. We had some, well, first think about cocoa. Cocoa, it grows in a band around the equator, up and down just a little bit beyond the equator. That's where it grows. So South America, Africa, Ghana, and Ivory Coast are the 2 major producers there. And what we've seen is some of the worry on disease and production has been alleviated in those markets. And it really started, like, I think in May of this year, it got better. And so right now we're still looking to the downside in that market. If we can get low enough to start finding some buyers there, that'd be around, thinking that'd be around 75, 7,400 in cocoa. And we're there. So this is where we've seen buyers come before. So if you're short, you want to stay short. But we're approaching levels that we've seen in the past, buyers coming in. So I'd be cautious on the short side and be aware you're in an area where those buyers have appeared. Excuse me. And it's really translated to these other markets as well in terms of behavior, where we are. Like even rough rice, it's at levels where we've seen buyers coming in just a few months ago. So I think on all these, you want to be sensitive to your trade location in terms of past behavior. And that usually implies hedging. On these markets, when you see those levels that buyers have come in, they're trying to lock in these lower prices. And I think that's what we should be sensitive to for these markets.
Now let's see how sensitive the market is today from a volume perspective. Is it a hot day? The answer is yes. Go figure, Dan. A little bit of a Powell president dust-up is going to drive some volume out there in the market. We've used this Dan, let me ask you this. You've been around the futures market for a while. We've been using this barometer of 300,000 contracts to break into the top 10 as kind of a threshold for a somewhat decently active day. What are your thoughts on that level, or is that perhaps too low for breaking into the top 10? That's an active day or not?
No, I think that's a reasonable level. One thing about that level is it broadens who could qualify. And so some of the markets that you wouldn't normally expect may creep in there because of a spurt in volatility, one that you may want to start following. So I think that's a good number. And it's hard to compare that to what we see in the notes or what we see in some of the indices. Those are in their own category when it comes to volume. So I think your 300,000 contracts is a reasonable number.
Let's see how reasonable or perhaps unreasonable we are today, because we're well past that number, listeners. And spoiler alert, it's all equities and rates. So go figure. Again, a Powell-Trump dust-up, Dan, is going to be felt most in the equities and the rates, and that's exactly what we're seeing in our top 10 today. Cost you 468,000 contracts to break into the top 10 today. So that's substantially more, roughly 50% more than we've been seeing of late, listeners. Again, that kind of intraday dust-up, that intraday whipsaw today seemingly impacting a lot of the volume out there. Number 10, kicking it off in the equities, it's the NASDAQ 100 E-mini. Again, 468,000 contracts on the tape. We're also hanging out almost exclusively in September with the exception of one. Can you guess which one it is? If you've been listening to the show for a little bit, you probably can. Number 9, to the rates we go. It's the 30-year, 569,000 contracts on the tape for the number 9 spot. Number 8, it's the Ultra 10-year, 579 on the tape there as well. Number 7, our lone December holdout on the list. Yeah, it's 3 months SOFR. Of course it is. What else is trading in December right now? 776,000 contracts on the tape for number 7. Number 6, keeping it in the rates. I told you we were biased in two complexes today, listeners. Keeping it in the rates for number 6, it's the 2-year, 988,000 contracts. And number 6, we're already pretty much kissing a million, listeners. Number 5, the micro S&P 1.1 million contracts on the tape, followed by number 4, the big dog S&P E-mini 1.18 million contracts on the tape. Number 3, the NASDAQ micro. So again, take the micros with a bit of a grain of salt, but they're putting up numbers today, 1.26 million contracts. And then our top 2, all rates all the time. You know what number 1 is probably going to be. Can you guess number 2? Maybe not. It's the 5-year, listeners, sneaking in there today. 1.6 million contracts on the tape. And then the big dog, as usual, the 10-year, north of 2 million today. So a pretty active day, 2.1 million. Dan, I can't say there are a lot of surprises in our top 10. Maybe the fact that the 5-year is sneaking into number 2 is a bit of a surprise. But you see the news headlines today, you can kind of guess that rates and equities are going to lead the dance. And that's pretty much what we're seeing, Dan.
Yeah, I think you're right on target, Mark. It's logical. And we think about that. What do they represent to us from a broader point of view? The stock market represents that forward thinking, what's going to happen in the future. So this idea of Powell, well, can he get rid of him? And if he does, what does that mean? Is what's going to change? And if you put somebody in there to change interest rates, what does that mean? So we see capital, the way I look at it, flowing between these sectors. Money, if it comes out of the stock market, well, where is it going to go? And interest rates is one of the places. And if you think about it from an investor point of view, interest rates, well, it gives me a way to gain some interest and it takes away that volatility I have in the stock market. But I do give up dividends and I do give up upside movement that we can see in the stock market. So it's that capital flow between these two. And you're right. The headlines that we're seeing in terms of Trump, Powell, because it's a biggie, it creates a lot of uncertainty. And stock markets are always forward thinking. If you give them a report, they say, well, that's what happened yesterday. Tell me about tomorrow. Am I going to get my dividends? Is the earnings going to go up? Is the stock market going to get stronger? Those are the concerns. And is there anything in the news that may disrupt that? And I think that's where that volatility kicks in because there is that uncertainty.
I was just looking while you were talking, Dan, just to see where some of the other contracts that people have come to expect and trade quite actively and watch quite a bit, how they're stacking up today. You got to go down to number 12 to find our first non-rates or equity contract today, listeners. It's the Euro, 281,000 contracts. Number 14 is our old pal gold, 227,000 contracts on the tape today. WTI, Dan, all the way down to number 16 today. Nobody cares about crude oil today. 216,000 contracts on the tape. And all the way down, barely making into the top 20 today, it's corn, 180,000. So if you're just wondering how things are stacking up, top 10, all equities, all rates, with the smattering of some other stuff thrown in there in the top 20 out there today. All right, listeners, to the year-to-date charts we go. Let's see how things are shaping up. And as we've seen, even today, names that have been beaten up pretty badly, like OJ and ETH, getting a nice lift this week. So that's obviously going to have some impact on our biggest losers for the year. In fact, yeah, you know what, Dan? Wow. It kind of surprised me when I saw it on our list because all year long, ETH has been number 1 to number 3 in terms of the biggest losers for the year. As of a month and a half ago, it was off nearly 50% for the year, Dan, like 49%. And I was looking at our list, and I don't see it in our year-to-date bottom 5, which kind of surprised me. So I had to make sure that we were running the right numbers, and we are, Dan. Right now, with this wild week we've had, up 18% for ETH. ETH has erased almost all of its losses for the year, Dan, now. It's off only 3.64%. So it's gone from being our worst loser of the year to almost turning green, I should say, on the year. So what do you think?
Well, it's interesting. And it's a reflection, I think, of what's happening in Washington. And that is the acceptance of crypto, that where it's being positioned in the marketplace. The big change, I think there were two, Mark. One was the creation of an ETF. The creation of an ETF on a crypto allows institutions that wouldn't participate to participate. It allows an institution that cannot trade in derivatives, but it can trade in securities. So they can add it to their portfolio in a regulated market environment. I think that was a biggie. The second thing that's helped fuel some of this is the attitude in Washington towards crypto, Trump's attitude towards it, regulators' attitude towards it, and the Congress attitude towards it. It's changed. And where it wants to be positioned now, if you listen to what Trump is thinking about. Well, doggone it, it's always going to be the U.S. has got to be the biggest and the best. And I think it's reflected in some of the movement we're seeing here. Because, Mark, what else really drives these cryptos? It's perception. It's one of those markets that perception creates the price level that we see. It's not a fundamental supply demand kind of issue. So it's very interesting. And I think that movement that you outlined for us, Mark, kind of makes sense if we think about it in the environment that now we're seeing in the crypto side.
Yeah, wild times. So the ETH bulls, Dan. We've been saying for a while, if ETH can keep up these weekly moves, we might see it erase some or all of those losses, and that seems to be where we're hanging out right now. There. So, I forgot who was saying in our chat there. They want the ETH Ferrari. Well, you're moving on maybe from the ETH Hyundai, Dan, at the very least. So that's good news.
Wait, Mark, what was it that they used to say on the floor that was sell the teenies, buy the
Oh yeah, sell the
something?
teens, live the dream, something like that, right? Yeah.
Oh yeah, there you go. That's
there
it.
you go. So there you go. They're living the dream right now in ETH, Dan.
Yeah,
And I guess if the dream is to be flat on the year, then you're living the dream. because you rallied 50% from those losses. It was down 50%, Dan. So quite the move out there in ETH. Let's keep it on the red theme since we're there right now, listeners. Again, some shakeups in our year-to-date losers, which if you're long these, you're happy. If you're short them, maybe not. Number 5 on our list for year-to-date's biggest losers, it's Dry Whey, listeners, off 12.6% today. Number 4, soybean meal off 13.45% year to date. Number 3, it's cocoa off 22.8%. We were just talking about the big moves in edible contracts out there, and cocoa feeling a bit of the heat, I should say, this week, off nearly 9%, and that's leading to nearly 23% downside for the year. Number 2, it's one of the EMs. Which one is it, listeners? Not uranium, it's lithium, off 25.46. Don't worry, Dan, I won't throw you any curveballs about uranium on the show this week. And then number 1, we got our old pal OJ, having a good week this week, but still languishing off 30.5% for the year. So we said, Dan, ETH has escaped our bottom 5. Anything else catching your eye in our bottom 5 list of the biggest losers, sir?
Well, I think soybean meal makes sense, even though soybeans are stronger. The driver, when it comes to soy contract, it's soybean oil. And 50% of soybean oil is used in biofuels. And we have some government regulations that determine how much biofuel we need to have in our gasoline. So we're seeing some demand on that side of it. And, soybean meal is one that's a high protein animal feed. That's primarily what it's used for, is animal feed. So I think its positioning kind of makes sense in that regard. Cocoa we looked at in terms of the concerns that we had globally in that market lightened up a bit. The lithium does surprise me. But with lithium, what's interesting is we have discovered a lot of lithium. The rare earth elements, for example, are not rare. That isn't the issue. The issue, though, is it takes a lot to get them, to find them. The processing isn't easy. Right now, 90% of the processing happens in China. So we can find lithium like in the United States, South America, Australia. There's been some big discoveries, but we don't process it. It goes to China. And one of the problems with processing it is that it has some radioactive elements. So the waste is not necessarily easy stuff to take care of. And so that one surprises me, because you mentioned it's on the negative side. I thought that would hold up a little more, especially with the demand that we're looking for in that market.
I don't know, Dan. If ETH can fight its way back, then there's hope for anyone out there at the end of the day.
You may be right there, Mark.
All right. Our chat is saying, sell the teeny until you get the Lamborghini. I'm not sure.
There you go.
I don't, okay, that rhymes at least.
There was a car in there someplace. I remember a fellow that did, I can't remember what it was. It was IBM. I don't remember the stock, but he was selling the teenies. And, it can work until it doesn't.
Yeah.
And when it didn't, I think he was down 250 or 300,000. And it happened overnight.
There were a lot of those guys. I used to joke they used to change jackets quite a bit because you're right, it works until it doesn't. I was always amazed they could always con someone else into backing them. They're like, oh, I blew up in the last 3 firms I was at, but this time it's going to go well. So those guys, for whatever reason, managed to hang around. They were like cockroaches. They were always floating around the periphery of the field.
It adds to this idea, seems logical, but it's an unhedged, huge exposure. And it wasn't uncommon to see people blow up with that.
Let's see what's blowing up to the upside this week, or I should say this year, Dan, shall we? Let's move to the green.
Sure.
Number 5 is one a lot of people were happy to finally see kicking into gear. It's silver. It was kind of languishing against Big Brother Gold for a long time there, but finally living its best life, up 26.25% this week. Our good buddy Uncle Mike will be happy to hear that, even though he undoubtedly already knows it because he's watching silver day by day. Number 4, it's soybean oil, up 33.86%. Number 3, it's high-grade copper, up 34.5%. It's, again, our year-to-date list. It's pretty much all metals and soybean oil, listeners. Number 2, palladium, up 38.92%. And our good friend, Mr. Platinum, coming in at number 1, up 54.33%. I guess, Dan, if you want some green in your portfolio this year, just buy some metals. That's the theme, sir.
Well, it sure seems that way. And, the first one you mentioned, I find interesting, and it's silver. That gave us a little pop to the upside. The issue with silver is, can we follow through? It's got the right ingredients. It's got the right structure. It wants to go higher. Does it have the fundamental drivers to do that? The thing I think what's interesting about silver is it can lead the way, in terms of volatility compared to gold. Gold, if you look at it over the last few weeks, couple months, we basically have been in a large sideways market. We're about the middle of that range. So gold is kind of trading at value. Silver, on the other hand, has given us that push to the upside. The other one you mentioned, which is interesting, is copper. Now, a few days ago, Trump came out and said 50% tariff on copper, imports of copper. Copper, boom, shot to the upside. And it's been sideways since then, which makes total sense. When copper went higher, did it go higher because we don't have enough copper in the world? No. Did it go higher because the 50% tariff has now been activated? No, it's not going to happen until August. So it went higher on what I call an anticipatory fundamental. It's anticipating that we could have that 50% tariff. And people said, holy Toledo, we got to buy some copper before that happens. So copper's in a position that if that 50% tariff doesn't happen, be cautious if you're on the long side. And right now, it's sprinted when that happened, and it's catching its breath. It's going sideways. Copper is unique because we don't have a substitute. It's not like, well, copper prices are really high. Let's start using, we don't have a start using product. Copper has a unique place in our economy, not just ours, but globally. I mean, here in the United States, we use, well, we use, I'm just thinking we use 600 pounds of copper in a new house. We use 44 pounds to 99 pounds of copper in a new car, depending on the car. We use about 200 pounds in an EV. We produce in the United States about 50% of the copper that we use. And the state that provides 2/3 of that copper is Arizona. When it comes to importing, we import the biggest is Chile, Canada, Peru. What's interesting about copper, if we look at that market, we got to think about it globally. And where does that lie? Well, China. China consumes about 50% of the global supply of copper. China also refines about 50% of copper. So when you look at these metals, you also want to think about refining capacity. It's like the rare earths. Where are they refined? Where are they processed? China right now. And if we look at what's happening in China, is their economy super strong? No. Is their consumption gone up a bit? Yes. But is there the demand to support copper beyond where we are? To be determined. So you got a very interesting list there, Mark. I think at least those, and then soybean oil, as we mentioned, that's that's not surprising that it's on that positive list that you have, year-to-date movers, because of where it fits in to our energy market.
And you know what always fits into the show? It's you folks with your questions. Let's get there now. A little bit of the old futures free-for-all.
Ring the bell. It's time to take on all comers in an epic Q&A battle royale. All questions can enter, but none can leave without an answer. It's time for the Futures Free-for-All.
All right, everybody, let's get down to business on the Futures Free-for-All. First off, Dan, I want to get your thoughts on the results of our question of the week from last week, which was very much germane to this program. We're always talking about a variety of asset classes. So we said, hey, we're coming into the second half of the year, which is wild that we're already there. And we said, quite simply, which asset class do you feel has the most upside for the second half of the year? We kept it very general, Dan. We just went straight equities, precious metals, and fixed income. We obviously didn't go as hard as we could into crypto and you name it, energy. We had write-ins for all of those. We had write-ins for crypto, private equity, small caps. One of our pro members, Age Del Aquarius, he wrote in for energy as well. He particularly WTI. He was looking for that. So a lot of write-ins, which we love. But Dan, at the end of the day, equities took it. Plain vanilla stocks, 45.8%. Number 2, gold/precious metals, 31.3%. Fixed income, 14.6%, and 8.3% for other. Dan, are you surprised that plain old vanilla stocks took the top spot, sir?
No, I would agree with that. I think we have that potential to the upside. We got fuel in terms of there's a lot of capital. It's not in the market. So I think we have some fuel to the fire when it comes to equities. I think the optimism that people are feeling could still carry this market over in the second half of the year. And so I guess I'm talking about my own bias, but I think that one makes sense to the upside. And then for your metals, depends on what happens on the equity side. What drives metals? Talking about precious metals. It's, again, perception. It's what I call an excuse market. If we have high inflation, if we have uncertainty, it could be war, it could be a terrorist attack, it could be something else, that can create some movement in the metals, but is it sustainable? And so I think it's logical where it fits. And then fixed income, you mentioned, is at the lower end there, but that makes sense too. If the equities are stronger, capital flows away from fixed income to the equity market. So I feel your list that you gave us, the breakdown is logical in terms of, where they all come together relationship wise.
Well, we aim to be logical at the end of the day. We all try to be Vulcans at the end of the day, Mr. Dan. You touched on crypto earlier. We have that actually is our question of the week right now. We said, hey, it's crypto week in Congress, hence some of these big moves we're seeing out here in these assets. Bitcoin just hit a new all-time high last week. I haven't checked today, but I'm guessing it's probably, if it's not there, it's flirting with another all-time high. It's about a little bit shy of 120. Obviously broke through that for the first time earlier this week, listeners. Which raises the question, which crypto asset has the most upside potential in the second half of 2025? I gave you three choices and the infamous other: Solana, Bitcoin, and ETH or other. Dan, we also had a question coming in for you from our live chat along those same lines, and it just scrolled past. Let me see if I can go find it for you. Here it is. What is Dan's outlook for crypto here? Are there any assets he prefers over others right now? So a twofer, Dan. If your thoughts on our crypto poll, do you choose one of those, Solana, Bitcoin, and ETH? And then our chat wants to know which ones are, maybe you have an esoteric altcoin you're really into right now, Dan. If so, feel free to share it with us.
Well, no, I don't have anything exotic. To me, I mean, ETH, we have some upside movement because of where it's trading. But to me, Bitcoin is the one that really attracts the attention and really attracts the order flow. So I lean towards that market to float to the top. And again, if we're talking about percentage of movements, maybe some other cryptos can have a higher percentage of movement. But when it comes to Bitcoin, I like the fact that there are futures, ETFs, ways to participate in a regulated environment. And it does attract the attention. And I think that, again, thinking about it, when I look at these markets, I think about who is there. And part of that, of who is there, are institutions. Again, they can touch an ETF. They can touch, well, not necessarily futures, depending on who we're talking about. Pension funds typically can't, but they can touch an ETF. And if they're going to pick one, it's going to be Bitcoin. So I lean towards that one to float to the top.
All right, there you go, listeners. He's leaning towards Bitcoin. Dan, let's see how our audience is feeling right now. You know what, Dan? As usual, they agree with you. 48.3% going for Bitcoin. 31%, Dan. I kind of wonder if we did this poll even a week ago, if ETH would even have 10%. But ETH's rallying hard this week. ETH getting 31% for number two. Solana coming in 20.7%. For a long time, Solana was the darling. Everybody wanted it. These days, it's old school. Bitcoin and ETH. It's kind of like the crypto market of 2017 all over again. And then we have nobody voting for other right now. I thought we'd get a lot of votes for weird altcoin like Tron and Cardano and Shiba Inu, everyone's favorite. But no love for that. So there you go, listeners. Bitcoin winning our poll, also stealing Dan's heart. All right, Mr. Dan, that music means you've survived another go-round in the world of futures. We had another fun run. We kind of went all over the place. Crypto, into metals, a whole bunch of equities and rates. No uranium this week, I'm sad to say, though, Dan.
Yeah, well, that is an interesting market.
That it is, sir. And in the meantime, if we talked about a lot of edible foods, all your lunch and breakfast table having all kinds of price changes this week. A wild time if you like to eat your futures. You like to have them delivered on your lawn, Dan, and then eat them. You had a wild week out there this week. In the meantime, if folks want to keep up on all these wild markets, where should they go? What should they do, sir?
Well, I do have a website, dangramza.com. And if you're interested in futures, I look at 22 different markets. There's a free video, a course that talks about the techniques that I use in the videos. You'll see red and green lines, which represent buy and sell levels. These are not recommendations, but ideas that I want to share. You can go back over 10 years and say, okay, what did he say when this happened, and what buy and sell levels was he showing? And you could go back and see that and see how trades unfold. The intent, again, is to provide some insights in terms of the futures markets and how they do unfold. It happens every day. If the markets are open, there's a video for it. So that's a possible resource.
It's more than a possible resource. You are being modest, Mr. Dan. It should be your go-to resource if you trade these markets, listeners. Dan Gramza, Gramza.com, the place to go to kick the tires and light the fires. If you want a bite-sized snapshot of all these markets, where else are you going to get that? DanGramza.com, the place to go to learn a heck of a lot more. That's going to do it for us for the most part on the on-demand side. That said, if you're hanging out in the pro, you want to hang out in a little bit, I will be back. I usually do it live to tape, but if you want, I could record it for you folks here. We have the newest addition to the network, which is, of course, the Hot Options Report. Obviously, we record that after the close, so sometime around 3:15 Central or so is when we'll start recording that. So if you want to hang out in the live, we'll be back in a little bit. I'll leave it open just so you folks can hear it. Everyone else can enjoy that on demand. That is the newest addition to the network. Folks have been asking us for years, hey, can you take what you do on shows like the Option Block and other stuff like that and just break it down into little bite-sized daily chunks? Well, ask and you shall receive. The folks at Public were all excited about the idea. And there you go. A new show is born. I guess we weren't busy enough. Over 18 years going on the network here. I mean, 3 new shows just in the last, 6 or 8 months? So wild times. Stay tuned. Check it out. If you're listening to the Futures Rundown, make sure you subscribe to the full network. And you will get it. And, of course, if you want to hang out in the pro, they're talking all kinds of fun stuff out there. They're talking ETH Ferraris, Shiba Lambos, talking selling puts and Circle, all kinds of wild stuff. That was a pretty good do. I see our buddy Mr. Bill from the Crypto Rundown on Monday. He's been in a pretty celebratory mood. He likes those puts he sold. Already probably cashing those bad boys in. Circle running today. If you want to hear all that kind of stuff, the Options Insider, as well as our crazy supersized pro Q&A yesterday, which was awesome if I do say so myself. Only one place to get it all, the optionsinsider.com/pro. Back again tomorrow, noon Central, 1 p.m. Eastern, with our good buddy, the Flow Master, to talk all things flow on the Option Block, followed by This Week in Futures Options, a program Dan has stopped in on once or twice. You'll have to see who's joining us tomorrow. Friday Vol Views, I'll be joined by Dr. Vix and appropriate special guests. And then we're back one final time exclusively for you pro folks with a little bit of options oddities. And then we're back next week, another great Futures Rundown. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.